This is the School Success Podcast, a podcast for school leaders to learn from other school leaders what's working and what's not, and to get inspiration and encouragement, as well as strategies to grow school enrollment, connect with families, retain teachers, recruit teachers, and everything in between. You guys are heroes, and I cannot thank you enough for pouring into this next generation that's coming behind us. My goal is you will take at least one thing away from every episode that you can take back to your school to make it better than it is right now. Please enjoy the School Success Podcast.
Time for school.
This episode is brought to you by our friends over at America's Christian Credit Union. This year, they're celebrating 65 years of service, and they're a credit union that specifically provides essential school banking services and an amazing tuition financing program for schools to reduce risk and administrative burden. You can check them out online, americaschristiancu.com/schools. That's americaschristiancu.com/schools. They are amazing. You need to go check them out. And now, enjoy today's episode. Hey, school success makers. Welcome to another edition of the School Success Podcast. I'm your host, Mitchell Slater. I'm joined by a very good friend of mine today, Frank Clement. Him and I have been friends for, I don't know, Frank, gosh, it's probably been 6-8 months maybe now, maybe a little longer, but I met him officially finally in October. We met again at another conference earlier this year. The guy will talk your head off, but in a good way, guys, because it's always good discussion and we always have a blast when we get to hang out. So what's cool about him is he's with America's Christian Credit Union, one of our partners and sponsors of the School Success Podcast. So we're having him on as a guest. So instead of talking about them as the sponsor today, like I typically do, I'm actually going to pass it off to him to do that and tell us why they're not a bank, but a credit union, because I just learned something new actually just a little bit ago. So Frank, welcome to the podcast, sir.
Thanks, Mitchell. It's so good to be here. And, it's true. I can be a bit of a talker. And, remember when we were at that last conference and we were out on the back deck overlooking the river and we talked for 4, maybe 5 hours straight. So the fact that you would even let me be here to continue that conversation says a lot to me. So thank you. But that's right. Yeah. So I'm with America's Christian Credit Union. I've been there for 4 years, but our credit union is actually celebrating our 65th anniversary this year. So we're all really excited about that. Our credit union, in some ways, is typical of credit unions. We are nonprofit, like all credit unions are. We maintain what's called a field of membership. And so we serve a specific community. But unlike a lot of credit unions, we're not geographically bounded. And so we can serve individuals and organizations across the country. So we have members in all 50 states of the U.S., and we can serve them with their banking needs. If they need loans, we can help with that. Our history actually started in the Nazarene Church. For those out there who might have some connection there, 5 Nazarene pastors got together. They pooled $135 and they said, let's start a financial institution and lend each other money when we have needs. And they invited other pastors and churchgoers. And so over the years, we've grown and we serve now a lot more than just Nazarenes, but we've had the privilege of helping a lot of churches with their construction loans, with purchase loans. And then recently, we've gotten really heavy into schools. So we've been serving a lot of Christian schools, which is exciting because this moment that we're in, and of course, I'm sure we'll talk about this more throughout the podcast, but school growth among private Christian schools is enormous. And so it's been a real honor to get to be the financial partner for a number of the folks who are doing that work.
Love it. Love it. And you even mentioned too, a little bit ago when we were at our last conference talking for 5 hours. Yeah, we talked till 3 a.m, just talking and hanging out. And I was like, bro, we got to go to bed, man. We're going to wait next day. But it was a good time. Well, I know your bank, obviously you guys you live in Southern California. I believe that's where the bank is also headquartered.
Yep.
So I always like to ask the guest, if I was to come visit where you live or where you are, what would you say, Mitchell, you got to do this to really get the full experience of where you live?
Well, there's this little tiny theme park. It's called Disneyland. And if you came out here, you might want to check it out. Some people say it's the happiest place on earth. I don't know. I haven't been in a few years. It's gotten kind of expensive, but no, I mean, there's so much out here. And I'm not a native Californian, so I feel like a tourist every day. But people love talking about how, you drive 1 hour this way and you can go skiing, and you go 1 hour that way and you can go surfing. And just the food landscape too is unreal. Just the spectrum of food that's available. So there's a lot. I mean, just come out for a week. We'll just do Southern California together.
Oh man, is it paid for by America's Christian Credit Union we'll talk to them later about that.
I got to talk to the CFO.
Good deal. Well, I would love to dive in because I know I'm personally going to learn a lot from you today for this, what we're talking about, the financial health of schools and what that looks like. But I kind of stick with the format as the guests who are the listeners have come to know. I stick with kind of the same 3 questions. So I'd love to kind of just dive into challenges. So what have you, working with schools and being in this industry for a while, kind of what have you seen schools challenged with? And then how do you as an institution come in and help them and kind of just, I guess, well, that's the part that's going really good, but I want to hear about the challenges that you're seeing schools face right now.
Sure. And I don't think this is going to be any surprise to anybody, but a lot of private schools out there, private Christian schools, are struggling with money. Finances is a recurring issue, and it's because they operate on really thin margins. And we see that a lot because, in many cases, when a school comes to us, they need money. And so they're acutely aware of their needs and maybe where things are coming up short. And then that creates an opportunity for us to help. But sometimes there's a challenge for us as well. There are some instances where we can't be as helpful as we'd like to be. And so we've been really trying to understand how schools operate and how it's a little bit different from churches, and what that means for, the opportunities and how we can be of service. But, I'd say there's kind of 2 things that jump out at me related to finances. The first one is tuition. And some schools accept what I'm about to say, and some schools are not quite there yet. But your school is a business in the sense that you have a service and you sell it to a customer base, and they pay a fee for it. So it's a little bit different from a church where you go and nobody's making you put money in that little basket. Hopefully you choose to do that voluntarily. But in the case of a school, you're going to say, this is what the 3rd grade curriculum looks like. And if you want your kid in here 35 hours a week or 30 hours a week in 3rd grade with, Mrs. Miller over here, this is how much it's going to cost. And so it's good in the sense that you can highlight the quality of what you're offering and explain why it's worth, the cost associated with it. But I'd say, invariably you're going to have people who say, I can't afford that. And then also the folks that I've met in Christian education, they have hearts of gold and they want to make their education as accessible as possible. So they're doing everything they can to keep the costs low for families. But then that means that they don't have a whole lot to work with when they're paying their teachers and when they're maintaining their facility. And so it's just this constant struggle of, it's a ministry, right? You're wanting to pour into these kids, but you have to operate like a business, and you have to recognize the costs associated with the service that you're providing, and that you're actually bringing in enough revenue to cover that. And so, with tuition, there's sort of the issue of where do you set it? And then there's also the issue of how do you collect it? And I've come to refer to it as the tuition dilemma. For most schools, they're not going to have a community where everybody can pay full tuition on day one. And so they're going to have to offer some kind of flexibility to families so that they can spread out the payments throughout the year to make it affordable and accessible. And so they offer an in-house payment plan, or they might use something like Fax or ClassReach or one of these online payment processors. And those are really helpful, and they definitely increase the amount of tuition dollars that are received in a timely manner. But those aren't true collections in sort of the financial institution literal sense of that word, collections. And so based on my conversations with schools, a lot of times, in fact, they're right around this time of year, right? From like February to the end of the school year, they're realizing we have some families who are behind. We have some families who have made it clear that they're not going to be able to pay their outstanding balance, but maybe they're asking to re-enroll for next year. And what do we do about that? And so collecting tuition is a problem. And I guess the other side of it, I've also met schools that say we never have any problems with collecting tuition because we pay Johnny over here, and all he does all day, every day is call people and remind them to pay their tuition. It's like, well, there's a cost associated with that, right? You're paying Johnny a salary, and he doesn't have time to do anything but call people and remind them to pay their tuition. So whether you're having delinquencies or you're having to pay somebody to really stay on top of your families, in either case, there's a cost associated with that payment plan. And some schools recognize that and some don't, but that's one of those things that kind of eats away at that revenue that they would use to cover their costs. So that's a big one. And then I guess the other issue that I see, which can also be an opportunity, so I don't want to sound too negative, but it's your campus. And what is your relationship to the land under your classrooms? If you own it, usually that's a good thing. Usually it's good that you own it, or you bought it and you still have a mortgage on it, but you are on the path to ownership. But a lot of schools are still renting. And some schools are even meeting for free. Maybe the school is or was a ministry of the church where it meets. And so it uses that space for free. And that sounds good, right? Free is always good, right? I love free stuff. Whenever I can get a free coffee at Starbucks, I'll hit them up. But sometimes we neglect our financial discipline when we get free things. And so I know of a few schools where, because they meet for free in their space, if they were suddenly to have to move, or if they were going to try to buy something, their whole financial model is not set up to have a $10,000 a month payment, because right now they have a $0 a month payment when it comes to their facility. And so they say, oh, we want to buy something. We just found out that there's this wonderful space available. What does that look like? And it's like, well, you set your tuition based on the assumption that your space doesn't cost you anything at all. And now your space is going to cost you something, which means your tuition is going to have to go up, or you're going to have to get a lot more donors who are going to have to be giving on a regular basis. And so all that to say, sometimes schools have gotten so used to low cost facility usage that they can't even imagine what it would look like to start paying for it. And that can be a challenge if something changes in their facility or their access to that facility.
So what do you see then for these schools is this as the main solution? Because I would assume you guys come in and you want to consult in a little bit of a way, but I don't know if you guys are like, hey, we're not going to actually consult a school and like, you need to raise your tuition by this much money. So how do you guys kind of navigate that landscape when you find a school that is needing a building, wants a building, but they have some things they probably need to get corrected on their back end side?
Yeah, that's a good point. So we're not consultants. We want to be good partners, but we have to be careful about giving too much advice. So I'd say, this is why we've loved getting to know some of the other folks in the space. So got to give a shout out to Champion Group. They do awesome consulting services. And so for a school that says we want to make a really big change to, how we operate, I would say, hey, go talk to Walter Kearns over at Champion Group and see how they can help you in terms of that strategic planning. But what we can do is we can say, we have certain thresholds that you have to meet. So this is, really just back of the napkin math. But we would say, typically if you were going to buy something, right, if you decided we want to go and buy our own campus, there are kind of two numbers that we talk about early on, and that's loan to value. And so we're not going to lend out more than 70% of the value of the thing you're buying. So it's like a house, right? Like you have to have a down payment. So in commercial real estate, usually you have to have about a 30% down payment. And so that right there can be a showstopper for schools that are like, well, I want to buy something for $1 million, but we don't have $300,000 in the bank. Okay, well, then you need to go get $300,000. But then the other thing is that we typically won't make a loan that is more than 3.5 times your annual revenue. And so let's say you want to buy something for $5 million, but each year you're only bringing in, $1 million just for easy math, right? So we could probably lend up to about $3.5 million. And so now the question is, well, how do you get that $1.5 million between the $5 million cost of the property you want to buy and the $3.5 million loan that we're able to make? And so, we can say these are our requirements. Like if you wanted to borrow money from us, or even, sort of hypothetical, they might say, we don't want to borrow money right now, but how do you assess our financial strength? We would say, well, we'll look at you as a borrower. How likely are you to be able to repay if you borrowed money? How likely are we to actually lend money to your organization? And that can give you some sense of where you are financially. And then you could go talk to Champion Group or some other consulting organization to come up with a strategy for how to improve your financial health. Focus Group is another good one. They do capital campaigns. And so if you're wanting to buy something and you have to raise a lot of money, they do a great job, not only in actually raising the money, but also helping you get in touch with reality. And so they do this super in-depth, like 100-page feasibility study where they basically say, the most you could possibly raise is this. Is that enough? If it's enough, great, go for it. If it's not, then you might need to change your plans. But anyway, in terms of what we would say to somebody who came to us with some kind of a dream or a plan, we always kind of start with those ratios just to say, how realistic is this for you?
So for a school that's listening and they're like currently renting, wanting to do, move, get a new building, what would you say is kind of maybe some of the first things they should do right now? If this is like, next year they want to do it, is like, hey, immediately hire like a consultancy to come in and assess, or they need to like just look at their school? Because I would assume, I was talking to a school just this past week and I added up how many empty seats they had based on how much their tuition was. And it just I was like just shocked. Is they have $2.8 million a year in revenue on the table. They have
Wow.
empty seats. They have empty classrooms that wouldn't. I asked him, would you have to hire more staff? And he's like, no, because we have each classroom still there. So like based on their tuition and the students, the empty seats,
Yeah.
$2.8 million a year on the floor. So I would go,
Wow.
okay, so when you're talking to a school, like if they're like, oh, we want to do this building, do you say like, hey, I saw you have 50 open seats. Like,
Right.
did you fill that? There's like $500,000 maybe right there that you're just not even thinking about that's in your
Right.
school. Like you guys, I guess I'm asking two questions here. Is like, do you
Yeah.
kind of consult on that way with them, or as a school who's listening, I guess what would they be looking at the first
Yeah.
steps to do? I would think they'd want to be full
Right.
before they're looking at buying something.
Well, and that's an interesting scenario that you're describing, because it makes me think of another metric that we will use during our underwriting. So we look at the percentage of, what percentage does your payroll account for out of your total revenue, right? So our rule of thumb is 60%. In general, you should try to have your payroll be about 60% or less of your total revenue, so that you have that extra buffer to be paying for the cost of your facility and your bus program if you have one, and whatever else you're doing at the school. But payroll shouldn't go past 60%. So if you have a bunch of empty seats, what that probably means is that you have a much higher teacher to student ratio than you actually need. I know, people talk about the benefits of small classes, and there may be benefits there, but if you're just talking about empty seats, that's not necessarily beneficial, right? That teacher could probably handle more students if you could find those students. And so in that school's case, I would probably take a look at what are you paying, in salary relative to what you're bringing in income, and probably your payroll is well over that 60% because of those empty seats. And so as you fill those seats and you have more revenue, but you don't have to hire more teachers because the teachers still have more capacity, those classrooms have more capacity. Now that payroll, expense gets much more comfortable relative to that total revenue. And so I kind of feel like that's the metric that would kind of suss that situation out. And so we might say you're probably not in a financial position to go out and buy something because your payroll costs relative to your revenue is a little out of whack. And being in a different building is not going to change that, right? Like you could move to a different building, but if folks in your community don't know about your school, if you're not doing a good job of marketing your school, and this is where I love some of the stuff that you do, Mitchell, like with Zenrollment, like it may be that there's lots of people who would love to have their kid in your school, but they either don't know about the school or they sought to take action and they were confused about the process, or maybe they called and they haven't heard back yet. They don't know what to do next. But all that to say, filling those classrooms is crucial if you're going to have an appropriate percentage of your revenue going toward payroll.
All right. So does this part come into play with getting approved for a loan with you guys? So let's say school's coming to you guys, they have 100 students, they're at capacity, and they have a wait list of 50 students on the wait list. Does that at all like help going, wow, like this school is like, they can build a bigger building and we'll be able to fill it because they have a waiting list? Because I've been telling schools that we are working with, I'm like, hey, you don't want to just be full. Like my goal is working with you is I want to make sure you have a waiting list. Like how much less stress is that if you need to raise tuition, or if you need to fill it, somebody drops out mid-year, like boom, you got somebody in there. Like just a peace of mind to know you have revenue sitting out there waiting to come in is way easier, especially if you want to grow. But does that actually help with getting approved for anything?
Yeah, it helps tell a story, because in commercial lending, a lot of it is sort of about trends, right? And so one of the first things we'll ask for is your last 3 years of financial history, so that we can look at what happened over those 3 years. Do we see growth occurring? Is it pretty flat? Is there actually some stagnation, right? Because sometimes organizations will come to borrow money almost out of a sense of desperation. And that's not a good place to be, right? They may feel like if we can't borrow this money and do this thing, our ministry is just going to fail. I mean, maybe sometimes that's true, but in general, that sense of desperation is not a good sign, and it's not a good place to be if you're considering borrowing money. And so if you can show, we had, speaking about this moment that we're in terms of private Christian education, I mean, I've talked to so many schools that were like, oh yeah, we had 200 students 3 years ago, then we had 300 students, now we have 400 students, and we have a bunch of people on the wait list. It's like, this is amazing. You are demonstrating a consistent, pattern of growth. And so when we're trying to assess, how much money we would want to lend to you, that's very comforting to us. And it helps us kind of tell that story internally. And also, we're a regulated financial institution. And so when we go through our exams with our federal regulators and, they'll just randomly pull a loan and say, explain this to me. Why did you lend them money? And we can say, this school is growing like crazy. They were outgrowing their space, and they weren't going to be able to accept any more students if they didn't either build something or buy something. And so, all that to say, yes, when we see that growth and we see those waiting lists, that's very encouraging to us as a lender.
Awesome. Well, we talked about challenges. I'd love to kind of just segment into what's going really good. So what have you seen schools do really, really well, maybe the financial area that we're talking about?
Yeah. Well, okay. So it's a good thing, but there's a sad lining to it, just, coming from a financial institution that historically has served churches. But all the data is showing that church attendance is dropping across the country right now. A lot of folks are not, identifying as any particular faith. They're not showing up to a sanctuary on Sunday. And so what that means is there's a lot of severely underutilized church spaces. And so that's a sad thing, right? But the silver lining here is that those severely underutilized spaces now have the capacity for these rapidly growing Christian schools to come in and use that space. And for us as a Christian credit union, we love to see that, because these spaces are continuing to be used for ministry. They're continuing to be used for sacred purposes. It's just a little bit different than it was in the past. So instead of the focus being Sunday morning worship, now it's 5 days a week Christian education. And so I can think of 3 schools off the top of my head that in the last few years successfully navigated the process of buying a church space and retrofitting it for their school. And now it's bustling with activity, and you have young people and families, there at least 30, 35 hours a week. And it's an exciting thing. And it also means that those schools, depending on how savvy they want to get, they can rent out their space to others to augment their revenue. And sometimes that looks like, renting out to a couple of church plants that don't yet have a permanent space of their own. And so, you could have a church that's worshiping on Saturday night and another one on Sunday morning. And so it's taking these spaces that historically really, only had people there maybe a couple hours a week, and all of a sudden they're full all week long, and that ministry is continuing to happen. So it's a really exciting thing to see. And part of that, and kind of jumping back to our last conversation for a moment, for schools that are currently meeting in a church space, there is a little bit of a risk involved here, if you think about it, right? If you are meeting in a church space, and if that church has seen its attendance decline, that church that owns the property may not be in a position to maintain that property like it used to be. It may not be in a position to offer a sweetheart deal on rent, or whatever the case may be. That church might even be in a position where they feel that they have to sell their property because it's a burden now rather than a blessing. And so if you are a Christian school meeting in a church and you're not quite sure what the health of the church is and how they're doing, there could be a rude awakening when one day the pastor, drops by your office and says, "Oh, by the way, we're probably going to be selling the space. Is there somewhere else you could meet?" Well, for a school, that could be devastating, right? You can't just pick up and move a school. People expect, that's where the school is, and that's where I drop my kids, and I know the space, and I'm comfortable leaving my child there, and I'm, so I guess I bring that up to say, the exciting thing is that there are these spaces that are available for these rapidly growing schools, but it also means that schools that are currently meeting in churches, it might be worth trying to have a conversation with your church landlord sooner rather than later, just to understand how they're doing, what their plans might be, and to make sure that their plans and their situation doesn't derail the health of your school. And it may be that you enter into a conversation where you discuss, hey, why don't we buy the space from you and rent the sanctuary back to you on Sunday? So the church can continue to meet there, uninterrupted. The school can continue to meet in the space that it's been for the last, 10, 20, 30 years. It's just that now the ownership is with the school rather than with the church. And it kind of serves everybody a little bit better. So that's an opportunity that I see. And I hope that both on the school and the church side, that there's openness to that. And it can be hard. I don't want to minimize this. Like, if you're a pastor of a church and you've been there for 25 years, and in recent years, due to COVID or social changes, you've just seen a steady decline in attendance, and to feel maybe like a failure, like maybe somehow you weren't doing something right. That's got to be really difficult. But for those pastors who can say, well, maybe God has something else for this property now, right? Maybe this space is not going to primarily be about Sunday worship. It's going to be about kids getting a Bible focused education 5 days a week. Maybe that's how God is transitioning this space for a new generation of ministry. And my hope too is that, as more and more kids are going to Christian schools, it means that we are raising up a generation that 20 years from now are going to be filling the pews of churches across America. And so it may be that for this moment in time, it's going to be the Christian schools that carry the church through. And then it's going to be those parishes that receive the benefits down the line, after these kids are graduating from Christian schools with a really well-formed faith.
I love it. And you made a point that is really funny. You brought it up about the school church relationship, because I just heard about this. Well, I guess I knew about it, but I found out more details about it just last week. There is an older Methodist church down in the couple counties south of us where the church my family goes to is based. And their multi-site campus is just the main campus. But there's an old Methodist church, been there for years, but was slowly just dwindling and had just a very small group of people. But they had a school. There was a Christian school that rented the building from them throughout the week. But the church was struggling so much, they didn't know what to do. They weren't able, I guess, to start missing bills and stuff. So they actually gifted the church to our church and said, hey, like, we love what you're doing. We know you could do more with this building than we can do. We wanted to give it its fresh new look. So our church was like, you got it, like took it. And then they kind of remodeled, they painted it. They gave it kind of a fresh up look. Well, I just found out. So we launched like a new campus there for our church. And then I just heard this last week, the school that is renting from them, I guess they love that our church is like the landlord now, because things are getting fixed and things are getting done, because the church couldn't do what the school needed for them. Like he said, toilets weren't getting fixed, windows were like left, like stuff was just breaking, but the church is like, we literally don't have money to fix it. So the school didn't have the money. It was just like a mess. It was a complete mess. Well, now our church is on top of it. We have like that full, with their rent, we give them like a full-time person that's taking care of all the landscaping, the leaves, the fixing. Like they don't have to do anything but teach their students, and we focus on the landscaping and all the structure of the school. And I was like, well, there's a perfect instance where the school's like, hey, you literally nailed it on the head before I even said it, about a church struggling to not even be able to help that school. And the school's like, oh snap, what are we going to have happen? And now the school is being taken care of, and how's all that? So it's just really cool how that happily ended up for that school to have that as a resource for them.
Yeah, no, that's an amazing story. And I appreciate you sharing that, because, you're in Florida, which is, everybody's moving to Florida. And I could imagine that there's some developer somewhere who would have happily bought that property, torn down the old church building, and put up some condos. Right. And so the tough thing about this moment that we're in is when churches get sold off to developers and, turned into who knows what. Well, you're not going to get that back, right? It's gone now. And so anything that we can do to preserve these sacred spaces and continue their use for ministry, even if, again, it's a slightly different format than before, I think that's something that we should be interested in, because, we don't want to 50 years from now look back and say, gosh, where'd all the churches go? I don't understand. Where'd they all go? Well, they basically got taken right out from under our noses because we weren't being more proactive about saving those spaces and finding creative ways to use them to benefit, the community. And in fact, I got to give it a plug for another organization I just learned about. It's called This Space, and it's almost like an Airbnb, but it helps churches rent out their space to the community. And so it's a way for churches to actually get people on their campus, right? People might not know about your church, or they would have no reason to visit your church. But if they're going for a community event that just happens to be held there, well, now they're on your space, and maybe something there will draw their attention. And then the other thing, of course, is it's additional revenue for those churches. And there's no reason why a school couldn't also be using this space. So churches and private schools could get onto this space and advertise, hey, we have a gym, right? So if there's a community sports league that wants to use our gym for a basketball tournament, this is the rate, this is the, cleanup cost, whatever. So I think there's so many creative ways for faith-based organizations to make the most use of their space, and also to, set themselves up to have a sustainable future, so that they're not losing access to their space kind of, against their will and at the worst possible time.
100%. And speaking of like things that are still going good, I just heard this a month ago. There was a guy I met at fundraiser for my son's school, and we were talking, and just obviously you and I, you can learn so much from people so quickly if you just start talking with them. And so he said that he's in the process of starting a new school in the next, I think he said it'll launch next year. And I was like, oh, where's it going to meet? And he goes, well, we have this old historic building, and it's going to be a Montessori Christian school is what their landscape to do, which my wife and I love Montessori. And so I was like, well, where'd you get the building from? How'd that work? And he said, you're not going to believe it, but there was an old historic building in the city that they were actually going to tear down to sell and do something with. The city was. And we came in and said, we'd love to buy it from you and like use it as our school. And the city just gave it to them. The city was like, you're going to preserve it. Like, you're going to actually like keep it. And they said, yeah, we want to. And they said, all right.
Oh my goodness.
And so they gifted this building, which at that point, again, the area it's in, I think it was worth $300,000 to $500,000, which obviously is not pennies,
Yeah.
So it's like, okay, so they got this building. Then they applied for a grant from the state of Florida and got it, which was for $500,000 to remodel the inside and actually make it ready. And what's super cool is it's an old house. So those that know like Montessori really well, like this with the structure, what they're doing with the school is like one of the rooms is going to be like the math room, and the other room is going to be like a science room. Downstairs is the kitchen where the kids can learn how to cook and bake and all these things. Like they're going to use the house as a whole school and launch next year, but they got it because it was gifted from the city and state. So I say that to those who are listening to go, man, there might be abandoned buildings owned by your city, your county, or somewhere that you might just get lucky, like pray about it or whatever, and say maybe you get it for free, or you can get a screaming deal on an old building. Then you run a fundraiser to remodel it, and you got yourself a new building. And might not be exactly what you wanted, but I'm sure it's better than spending $50,000 a month on rent or $50,000 a month on a mortgage payment too.
Well, and the other thing is that new builds are more expensive than they've ever been, both in terms of absolute dollars and also relative to the cost of buying an existing space. And so I would caution anybody who's thinking, oh, we got to build a new campus from scratch, from the ground up. It's going to be our campus. It's going to be totally bespoke. Well, that's going to cost a lot of money, and it always takes longer than you think it will. So I love what you're saying, Mitchell. Get creative, look around. What spaces in your community might be available that are maybe a little bit older, but we can preserve those buildings. You save yourselves the cost of new construction. Yeah, maybe you have to do some renovation to it, but it's much different than having to go get permits and build something, from the ground up with all the expenses and, commodity prices all over the place. So that's awesome. I love that story.
Love it. Well, as we kind of wrap up the podcast, I always like to end with my favorite question, which is give you a chance to share a piece of advice that you would give for any of the school leaders that are listening. So it could be anything you want, Frank, but what would you say to the school leaders listening?
Yeah, well, I can't claim credit for it, but I love how the Association of Classical Christian Schools is always encouraging people to look to the future. And I've heard different versions. So sometimes they say, plan for your school to be here 100 years from now, plan for your school to be here 300 years from now. I think either sounds fine. 100 years, 300 years. In either case, we'll all be dead by then. But think sustainable. And that is, both in terms of the soft stuff, like how you build a community, the relationships, how you care for your staff so that your teachers will stick around. I graduated from high school 18 years ago, and I recently visited my high school, and there were 3 teachers there who had been there when I was in high school. And that was so special to be able to see them and tell them about what's going on, and, telling them I have a 4th kid on the way, and they're like, who let you have kids? And I'm like, I don't know. But I think, thinking in terms of sustainability, in how you build your community, but then also financially speaking. And so, like I said before, if you are currently meeting in a space where you pay nothing for that space, make it a goal to start putting some money aside every month. Just put it in a savings account, right? But start building the financial discipline to maintain a monthly payment so that in the future, if you have to rent somewhere at market rate, or you want to actually buy something and have a mortgage that you're paying off every month, take these little steps to build your muscles to be sustainable as a school. And as much as possible, isolate yourselves from any outside influence that could derail you. So think about your relationship to your landlord. Make sure that any risks that your landlord is facing don't end up becoming your risks. And even, Mitchell, you live in Florida. Florida is becoming increasingly generous with school choice programs, and that's a good thing, right? We should all celebrate that. But there is a danger for schools that get so used to the funds that they get through these school choice programs that they forget what it's like without. And then if another party comes into power, or if the state's budget runs into issues and they decide to cut funding, and suddenly a bunch of Christian schools that were used to receiving vouchers or ESAs are suddenly not getting those dollars and not getting those families, then what? And so anything that might cause you to be entering into kind of a false economy, I would say try to open your eyes, look around, and what's keeping us from potentially being sustainable for the next 100 years, the next 300 years.
Man, I love it. And to lead off on that last part, just with the school choice, I've been telling schools, I see that continuing to just grow and catch fire across the country, to where schools who didn't have to worry about marketing their school are going to have to actually worry about marketing their school, because they're like, well, I want those students to come for their school choice here. If public schools have to start truly fighting for that every school's gonna have to worry about how they look online and what they're putting out there for people, because they're like, well, I gotta try and get these people to use their vouchers and their school choice stuff here. So it's going to be, I think, very interesting in the school landscape in the country if that continues to do, which I do believe it'll do that across multiple states at least. It's going to be very interesting. The marketing world that schools are going to be pushed into, whether they like it or not, to make sure they get their school out there.
That's right. And I'm happy to say that California will always be the control group for the experiment, because they'll never have school choice in California. So we'll know truly how well it works in those other states. You just look at California and compare.
I'll keep that in mind. Well, Frank, I appreciate your time. I appreciate your sponsorship, your friendship. I appreciate just you being on and taking the time. We could easily, I know, talk for hours, because that's just what we do, Frank. It's what we do. But I love what you guys do for schools. I love how you serve them and how you serve churches and all that. So anybody who's listening, if you're a school, Christian school, is needing help with any of the stuff Frank talked about, I do encourage you to go chat with them. Go to their website, americaschristiancu.com, right?
Yeah.
Yeah. All right. Cool. americaschristiancu.com/schools if you really want to go specific, but they're a great group of people over there and are there to help you and serve you in any way that they can. So Frank, thank you so much for coming on today, man.
Thank you so much, Mitchell.
Well, another huge shout out and a thank you to Frank for taking time to be on the podcast today. I love that guy. He is super awesome. I love chatting with him. And as we said, we've talked for hours and hours and hours before, and I could easily do it for more. Great guy working for a great organization over at America's Christian Credit Union. If you guys haven't checked them out before, please go to their website, americaschristiancu.com/schools. That's americaschristiancu.com/schools. As always, I'm hoping you were able to take at least one thing from today's episode that you can take back to your school to make it better than it is right now. And maybe it's something where you guys are looking to get a building. Maybe you don't have one that you own, or maybe there's not a good relationship right now for where you're renting from, or maybe you're looking to start a school and hopefully you're able to get some ideas that we talked about for getting a building, maybe free from your city, or some loan maybe from America's Christian Credit Union, or whatever it might be. But we hope you guys were able to get some resources from today that you guys can use going forward. If you guys need a great group of other school leaders that you want to connect with, please join our private Facebook group over on Facebook called School Success Makers. That's over there, free group just for school leaders called School Success Makers. We'd love to see you in there. I'm personally in there, so I'd love to see you in there as well. And we also have some great resources over on our website, schoolsuccessmakers.com. So go over there and check it out. We have a weekly newsletter called the School Success Report. It's got a whole bunch of fun things, shout outs. We're going to have some giveaways, some fun stuff in there. So go subscribe to that. And then I think that's it, guys. So we'll be back here next week with another amazing episode as usual on the School Success Podcast. We'll see you then.